So this is Monday after Brexit, and today we're going to look at the incidences of this extraordinary vote on a selection of markets. We will first start with cable, which has seen the strongest hit. This is an investor's view, so a more longer-term view, combining a weekly chart for the perspective over the next few quarters, a daily chart for the perspective over the next few months, and an hourly chart for the perspective over the next few weeks. Our small auto-interpretation tells us that we are in a potential resume downtrend in a pullback period. Indeed, the long term is still heading down, the medium term is still in a correction up, and the short term is moving lower. We can see it here in the chart. The hourly chart saw a strong sell-off on a Thursday to Friday night from almost 150 down to 132. At the moment, that's pretty much where we stand. We believe that there's a bit more time and a bit more potential into the low 130s to be reached over the next few days. If you see here, the risk index still has a bit more to go to be oversold. The daily chart, which had been in a correction since it's April, is now neutral. You don't see any targets here anymore, and is just waiting to resume the downtrend. That's in the perspective of the weekly chart, which is still heading down, and with potential possibly into the low 130s down to possibly 128. So still under pressure here. It's not time to jump into it at the moment. Let it settle over the next few days at least. We look at the shorter term perspective with this trader's view, and at the moment all three trends are heading lower. You could see the 60-minute chart with the perspective over the next few days, which is still heading lower. The 15-minute chart seems to have reached its potential, but it's not quite yet oversold yet. And the 4-minute chart is still also heading lower. So also too early to move here on cable. Now moving on to the euro dollar, which has also seen a strong hit. It had been on the weekly chart in a correction up, and that correction up in terms of time had come to what should have been its end. So we're in the risky zone on euro dollar. And it started with that extraordinary decision to move down, and the corrective targets that we're eyeing are in between 110.80, that's pretty much where we are, to 108. That 108, we believe, will serve as strong support in this corrective move down. The hourly chart is also heading lower. It's not oversold yet, so there's a bit more to go. And we could also see that the 108 figure is quite important. So both the hourly and the daily are showing us potential towards the 108 levels over the next few weeks, next few months. So we believe that 108 is going to be a strong support zone for this corrective move down. Now, the big beneficiary of all this has been the yen, and you can see dollar yen has had a very strong move down. It is now slightly above 102. All three trends are heading lower. It may be a bit exhausted on the daily chart, and the weekly chart just made it below its corrective targets. This could have quite strong consequences for the next few quarters, yet we would like to have a bit more confirmations here as we are approaching a very strong support zone, which has already been worked in the past here during 2013 and 2014. So we believe that towards the 100 mark, you should see a lot of work in order to establish if we are in a long-term downtrend or if it's just a very strong correction here under exceptional circumstances. Now moving on to equity, interestingly enough, some would say that the FTSE hasn't moved that much. We could see that it's now neutral on the daily and the hourly chart, still slightly positive, hanging on to the strong gain after the Cox murder about 10 days ago, and that the sell-off was substantial but hasn't been able to retrace this move. We could see that we're still in danger over the longer term. So it's a neutral situation, yet in a longer term downtrend. Yet that probably presents a false picture. And if we look at the tracker in the US, which is expressed in US dollars, the picture is completely different. So we're still in a strong downtrend over the weekly, which still has some potential over the next few quarters. The correction up is labeled done on the daily, so that correction up that we've seen since this spring is over, and now we're moving aggressively down on the hourly, and we're standing at the moment around 1450, 1457, and we would have the potential to move below 14 over the next few weeks. Here also the risk index is not oversold yet, so the move doesn't seem over yet. Looking at other equity markets, we could see that the Dow Jones stocks, which is an interesting one because it includes UK stocks expressed in euro, is taking a very strong beating. Free bears at the moment. Quite a lot of risk here on the weekly chart. The daily chart is back into a downtrend, not yet oversold, and the hourly chart is moving lower, but would still have some potential. So potential continuous uptrend on the Dow Jones stocks. So too early to move there and buy the dips. Now moving on to the world index, it's hanging on to an uptrend on the daily, yet it is a resumed downtrend in what we could label here as a pullback period. The longer term is still quite risky. We believe that we can't be as negative as we could see it here. We're probably going to find support towards the low that we saw earlier this year. But at the moment, it just highlights the danger here with a longer term downtrend, a correction up here that is under pressure, and the hourly, which is moving down quite aggressively with more potential over the next few weeks. So also here, still too early to move, we believe. Finally, the S&P presents the better picture. We're still consolidating here, at least we believe it's a consolidation and not a distribution. On the longer term chart, the daily is still positive, but it's probably going to turn in a correction down with this strong move over the next few days, and the hourly is correcting down. Possibly on the hourly, we have potential at below 2000, probably toward 1970, 1960. Pretty much the levels which would be slightly above the rebounds that we saw earlier this year. So around 1950, we would see strong support for the S&P 500. The swap rates have been moving down quite aggressively. This is the 10-year swap rate in the UK. It is below 1% for the first time in a very long time. Free bears, so that is going to continue. You could expect, with as a support measure, some quantitative easing from the Bank of England. That may be in the cards. And you can see that all three trends are still heading lower at the moment, so bonds should be well supported. We don't have the hourly chart on the true government bonds, but you could see despite the credit warnings from S&P, for example, which is saying that it's going to downgrade the UK, we are still heading lower on this weekly chart on the 10-year benchmark bond yield in the UK, and possibly it could lead us below the 1%, but possibly down to 0.50 over the next few quarters. The daily is coming towards exhaustion, but also here still some pressure, and these are extraordinary consequences. So as long as we are in a downtrend, bonds should still be UK bonds should still be strong. Moving on to gold, which has served as a safe haven. We can see that we believe we're in a correction up, and although it's only a correction up, we still have some leeway here. I mean, the correction up could lead us up to above 1400 over the next quarter or so, although we're slowly getting into this target zone, and the daily shows us that possibly we could make it above 1350, possibly to 1365. The hourly is also heading up, and also around the 1350 over the next few weeks. So very well supported here as a defensive asset, gold, 3 bulls, so it is profiting from the crisis. And that's all for today, and we hope you the best of navigation in these difficult markets.